Happy New Year! Before we begin with the cost update, this is not financial advice and do your own research. Hopefully this video will be quick and short. I just want to go through a few things. But first, Happy New Year, and I hope you've had a great New Year's Day. So first, we broke the previous low from what we had here, which I was anticipating the third wave to begin. So now we're over here, but I expected this to hold and begin our wave 1 of 3. And since we have broken lower, it means that we're still in a corrective phase, as in this whole entire move here is still a corrective move. So what does this mean for price trajectory? Nothing. Nothing has changed because we have not broken the lower low of $4 back in here in April 9 or 10. The $4 right here. So if you're worried about the price action, I want you to zoom out, because people forget that the volatile moves to the upside are always extreme and always quick. So what we have over here, and even the original squeeze, right? And all this drawdown is simply noise, as we are still trading within a range. All this move is just trading within a range. We have not made any lower lows because, again, you can see that this is we're still higher than what we had back in April. So in fact, it would have to go all the way back down into this area of the larger wave 2, about $2.29, before my price target would have to be adjusted. Secondly, speaking of lower lows, we had the strong move up and held higher from back at 2021. We had this entire move up and held higher. We had this higher low. If we pull this Fibonacci retracement from the low into the high, we can see that this has essentially held up at 78.6% retracement level. So again, zoom out, because everything is still very, very bullish. Thirdly, and this is important, if you bring out your RSI, which is this indicator right here, if you bring this out just by going to indicators and searching RSI, you'll find the relative strength index. Basically, it calculates how strong the momentum is, how strong the move is. And essentially, if we go over, if we enter this area which is above 60-70%, this is considered overbought. And if you go under this line at 30, it would be oversold. That's the basic gist of it. But if you bring out your RSI, you can see that right now what we have is a strong bullish divergence. Because, okay, as you can see back in April, before we ran up to this $6.60, from this to this, before we had this run up, we had lower price action. The price was making lower lows, while in relation to the RSI, which was actually making higher lows. Specifically near the bottom phase, where this was already oversold in this area. However, we recovered and went down, making an even lower low, but this, the RSI, actually made a higher low. This is bullish, and what ultimately showed that Koss had made a bottom. Let's not forget the move we had earlier as well. This move from $2, right? This $2 all the way to $18, which is about 700% move. If we do the same thing in this, where we had this lower low price action from here, and then compare it to the RSI we have here, you can see again we entered the oversold area within this range, that's already been oversold, yet we made a recovery only for it to come back down even lower than this level at this area. But the RSI made a stronger and higher low, which again shows the RSI bullish divergence. Now, if you look at price action today, we can see that it is actually forming the exact same thing. So you can see, of course, lower price action, but we do have a higher low in the RSI indicator. So again, we're seeing the exact same pattern we're seeing, so we can anticipate a move up. And this is something to look forward to. But is it possible that we go lower? Yes, of course. But it shows that the momentum is about to flip, and it is getting ready to move upwards. Again, let's not forget that corrective waves are usually very prolonged, and we should never assume when the corrective wave is completed that we should always look for confirmation of a reversal. So again, with this kind of move, we cannot just assume that it's done its corrective wave, because as I said before in the previous video, whether we would be making some kind of zigzag or an expanded flat, which ended up being or looking to be an expanded flat. But again, we had to wait many days and weeks just for some kind of confirmation to see what kind of price structure it is. And because of this, we should always be cautious when assuming a reversal. This is not to undermine the RSI bullish divergence, however, because we know that once we have this RSI bullish divergence, there is some kind of confluence of it going up and some kind of bottoming phase. The fact is, due to this still being in a corrective wave, there are many shapes the price can take. As I said before, it is an expanded flat if we can hold the $4 level, which is of course this bottom of wave 2. If we don't, then assume that the smaller degree wave 1, which is what we have here, this right here, assume that this wave 1 is incorrect and the count is invalidated. And what we're looking for is actually another move similar to the one back in 2024, which is again this. So if we pull out this Fibonacci retracement level from bottom to the top, we can see that in fact the retracement level for wave 2 is actually in the middle of two Fibonacci levels. So we have this over here back in April, and also what we have here where we touch this 70.70% retracement. So either the drawdown is overextended where it just pushes just a little bit over it, or we're actually heading down into the 78.6% retracement level, which is about $3.54, which ultimately means more red days to come before we get another higher high. So if we head down lower, and the lower degree wave, or the smaller degree wave 1, if we do in fact head lower to 78.6, which breaks this previous low, and it would invalidate ultimately this smaller degree wave 1, then what we would have is actually a 1, 2, where this 2 would be brought down to wherever it would terminate at. So if it was to come back down and we make a lower low, then it would strongly suggest that impulsive waves in Koss are expected to be very high percent moves to the upside. In other words, the impulsive waves are like squeeze-like moves, so this would be the impulsive wave. And if this is the impulsive wave, and this is invalidated as the wave 1, we can fully anticipate another strong move up, the squeeze-like move up, to be the next impulsive wave. They will catch you off guard and move incredibly fast to the upside, capturing multiple percent gains in a matter of weeks. And watching the price action day by day, I'm starting to believe that this is the case. Everything to the upside will be aggressive and will catch people off guard. you can already see this impulsive wave back in 2024 last year, or 2 years ago right now. We can already see that this impulsive wave 1 was already a 50% move. It was a 1, 2, 3 into a 4 into a 5. And this ended up being a strong 720%, approximately 700% move up. And that would be the impulsive wave. So in fact, if we're assuming that this entire move over here is corrective, and we expect the retracement back down into 78.6% retracement, which is about $3.54, I believe, then we would expect that to be all of this to be corrective and this to be invalidated. And we would be anticipating the next impulsive move to move something like this again. So what does this mean? Not financial advice, it means that buying and holding is key to making great returns on costs. Buy on consolidation, which is the corrective wave, and sell on impulse, which is this wave. Trying to time the exact bottom is near impossible, and selling while it's running up is the best way to capitalize on your gains. Don't try and time the top because of how volatile the day-to-day moves are. Rather, sell when it's climbing up to ensure that you capitalize on every cent. If you were to buy during consolidation waves or corrective waves, you can easily dollar cost average back into lower lows, right? If you were to essentially buy near over here while it's squeezing and you did it on impulse, right? And let's say you missed the top over here. Let's say you entered all the way back in 2021 and you missed the top because you were too greedy. Well, you had so many chances and opportunities to average down. Of course, you wouldn't want to essentially be buying into a stock that's making you lose money, because I can imagine how frustrating it is to see one of your tickers being down 96%. But the truth of the matter is, once we have cleared this corrective wave and we saw this impulsive move to the upside, we already know that there's going to be more upside to be captured in an Elliott wave perspective. If you don't know what I mean, you can watch my older video of Koss. I broke down the structure earlier in one of my videos, either Koss or GameStop, but they essentially move in tandem. But what I'm trying to say is that if you average down, because you had so much opportunity to average down in here, and not even that, if you entered a bit later here, you had a lot of opportunity to again average down. Dollar cost average is what will make you get a lot more out of your money when you sell. Buying in consolidation, even though it's boring, it can make your dollar cost average a lot lower. And trying to time the bottom is near impossible. If you were to wait for this over here, even though it was essentially oversold, you could have bought here, but again, we see that this actually broke lower under this area. It broke under this for a whopping 13, almost 14% lower. So if you were to buy here, over here actually, this is the oversold area, which is actually 19, nearly 20% lower. If you just put all your money in here, believing that it's going to reverse just because the RSI is actually oversold, then you would be frustrated knowing that it went up 40% only for it to come back down even more. So believing that this is bottom would have just made you more emotional with this kind of roller coaster of a move until finally we break out. And again, knowing how volatile these moves are, you should at least try not to time the very top, right? It makes sense how if you were trying to time the very bottom and you would be in an emotional roller coaster, so why would you do that on the flip side and try to time the very top? in just one day you can already see that there's a huge percent drop. This went up 40%, but the next day went down 20%. And if you're at the very top over here, it's a plus 143%, only for the next day to actually be 25%. But the move itself from top was actually down 25%. Again, nothing I say is financial advice. You can do what you think is best for you. I am just telling you my personal mistakes that I've made in the past. Anyways, my views and expectations for Koss. At this point, I strongly believe that there is more downside to Koss. It looks to be making the same move as it did back in 2021. So we can see how this was impulsive, up thousands of percent, hundreds of percent, all the way back down, which is a very long and drawn out corrective wave. And now we have again the same thing where it was very impulsive to the upside, but then we had a very long and drawn corrective wave. So it looks to be making the same move as it did in the original run back in 2021, but in a smaller scale. And because the original run, again, I showed it retraced 78.6%. Let me just put it out again. We had this going down to 78.6%. So again, because I believe that it's doing the exact same thing but on a smaller scale, I would not be surprised to see if this actually went back down to 3.54, which is the 78.6% retracement. But the thing is, regardless of whether it completely retraces back down to the 78.6% or not, I will be buying more because personally it looks like a very great buy for me, especially because we do see some bullish divergence on the RSI. Now, if it retraces back down to 78.6%, that means that we have made a lower low, and the price target will have to be adjusted, because again, if you know the Fibonacci extension, you have to do from the very bottom of the original run up to the top, and then to the second low, basically. So what we had before was over here, which is just under the 70.70%. But if it were to break lower, it would go down to 78.6%, assuming. Then of course the price would come down a bit. So you can see that each level actually went down accordingly. Because I already have this going from the beginning to the top into what I believed was wave 2, I had this one as 33.09. However, if I draw the Fibonacci extension again, but assuming that we go to 78.6%, then we can see that the one is now 29.05. But in the grand scheme of things, that's a very small adjustment. So as always, I will be looking at my Fibonacci extension levels to determine my exit targets. As I mentioned in my previous videos, in an ABC or 1, 2, 3 wave, extension 1 is most likely the target. That is where I will exit majority of my holdings in Koss, and I will not be complaining about a 500% move up, even more, but my cost average would be about this area over here, $5. So it's about 500% move up. And can it go higher? Of course. You can watch my previous videos where I kind of just broke it down, right? We have this level, the one level, we have the 0.618, we have the 1.618, and then we have all the way up here, this area. But I will trade to levels, and I will not be greedy, because in the end of the day, it's how much you can keep. It's how much you can save and you can keep, rather than how much you can maximize on. So ultimately, nothing has changed. I encourage you to watch more of my Koss videos if you still do not understand why I am bullish. Do not be spooked if it breaks down to the 78.6% retracement level. Be spooked if it breaks the previous low of 2.3, whichever low this is, 2.28. So that's all for today. I wish you a great 2026, and I'll see you in the next video.